Budget 2026 is officially out. And while the headlines say no change in tax slabs, that's only half the picture. If you are an individual, there are four massive income tax changes that will directly affect your bank account or your compliance starting next financial year, mostly. We are comparing the old rules with the new ones to show you exactly what's changed. Let's dive in. First, have old ESOPs or RSUs, a forgotten bank account from your student days abroad, a foreign savings account, an insurance policy, and so on? If yes, the new Foreign Assets of Small Taxpayers Disclosure Scheme, FAST DS 2026 in short, is a huge relief. At present, residents with such undisclosed foreign income or assets face a 10 lakh annual penalty and potential imprisonment under the Black Money Act. What's in Budget 2026? A one-time 6-month window is opening, dates to be notified, for small taxpayers to settle these issues. There are two categories of relief. Category A, if you never reported the income or the asset, here the value is up to 1 crore, as on 31st March 2026, you pay 30% tax plus 30% additional levy, total 60% to get a clean check. So if the value is more than 1 crore, then you're not eligible. Category B. If you paid your taxes but simply forgot to list the asset in your ITR, here the value is up to 5 crore, you can fix it by paying a flat 1 lakh fee and avoid 10 lakh annual penalty, plus zero prosecution under the Black Money Act. It's a compliance reset you shouldn't ignore. Moreover, Budget 2026 has decriminalized minor non-disclosures involving movable properties where the total value is up to 20 lakhs, effective retrospectively from 1st October 2024. So no more prosecution. Change number 2. Up until now, buyback of shares was taxed as dividend at your slab rate up to 30% on the full amount. So no deduction for cost of purchase. It's now treated as capital gains taxed at 12.5% for retail investors like you and me, but only on the gains. So you can avail deduction on cost of acquisition. To prevent misuse, higher effective rates are proposed for promoters, 22% for corporate promoters and 30% for non-corporate promoters, and these changes are effective from 1st April 2026 onwards. Number 3. Home buyers, this is for you. If you are buying property from a non-resident, you no longer need to struggle with getting a TAN, tax deduction and collection account number, which is similar to PAN. You can now deposit TDS using a simple PAN-based challan. So for resident buyers, now the process is similar whether you buy from a resident or a non-resident seller. This change is going to be effective from 1st October 2026 onwards. Now, if you're wondering what this TDS is for resident buyers, watch the video, link in the top right corner. Number 4. This is related to Form 15G/H. Now, what's this form? If you invest in deposits, stocks, bonds, etc., you make self-declaration with the entities like banks, companies, etc., not to deduct tax at source on such interest, dividend, and so on when you anticipate your total income to be within the exemption limit. 15H is for senior citizens and G is for others. As of now, you have to file this form with 10 different companies separately if you hold shares from 10 different companies. Now, what's the change? One single filing with the depository, NSDL or CDSL, is enough. It's going to apply across all your holdings, but this is effective from 1st April 2027 onwards. Now, let's quickly talk about few exemptions or tax-free incomes. 1. Disability pension covering both service and disability components is gonna be exempt even for paramilitary forces at par with regular armed forces. 2. SGBs, sovereign gold bonds, are tax-free only for original subscribers holding to maturity. So premature redemption and secondary or stock market purchases are taxable. Number 3. Any amount, compensation as well as interest awarded by the Motor Accident Claims Tribunal is now fully exempt. Earlier, interest was taxable. and no TDS on such interest. Earlier, this threshold for TDS exemption was only 50k. And all these changes are going to be effective from 1st April 2026. Before wrapping up, be careful traders. STT rates have again gone up on futures to 0.05% from 0.02% and on options to 0.15% from 0.1% or 0.125%. This hike is to curb excessive speculation. Again, this is going to be effective from 1st April 2026. So, Budget 2026 is clearly about making compliance easier even if the rates didn't change. Which of these changes is the biggest win for you? See you in the next video.